Really,
Oh,
at
you
this
you got
point,
out of your Exxon yesterday?
I did. I
Nice.
think I made 40 or $50 on it
Awesome, dude.
in 2 days. Yeah, I mean, we sold that put credit spread. I think for like a buck 20, buck 40. Made 40 or $50 in just a couple days. Yeah, it made sense to go ahead and get out of it. Took off a lot of positions yesterday. If I go into activities yesterday, I took off a call debit spread in M&Q for a winner. I took off SMH for essentially a small loss, basically a scratch. I had been losing on this position for almost a month, and the huge up day for the semiconductors actually had this thing come back to where I could get out of it for practically a scratch, so I took that opportunity to not take a loss. Apple, I had a call debit spread that was like $100 winner. It was a nice little win. Tesla had a put credit spread, took that off for a nice little winner. SPY put credit spread, our little campaign trade from 2 weeks ago, we took off yesterday. Nvidia, I had a short put that I took off for I think about 40, $50. Qualcomm, we had a put credit spread that I made about $50 in. Taiwan Semiconductor, I had an iron condor that I took off for like a scratch, maybe I don't know, $5 winner or whatever it happened to be. Basically, it was a trade I was in for nearly a month and it never went anywhere. So I went ahead and got out of that. But basically, I was trying to just flatten out everything. I was trying to, anything I could take off the books. I wanted to free up some buying power, and next week on Monday, I'll start fresh, putting on some new positions. Amazon, I had an iron condor that I believe was a nice little winner for me.
Okay.
MES, I had, what the hell is this? That is a long call condor that I put on. That's an opening trade, not a closing trade. Okay. But I had 10, 11 trades here, but 9 of them were closing trades. So, because I had, at one point, I had like 25, 26 positions here in the positions tab. You can see now I have like 13 positions. So I closed like half the positions here in the last couple of days.
Okay, so this morning when I was taking a shower, I was thinking about what you said about the spa always goes up, and I
Well,
was
it
gonna
doesn't always go up, but over
right
time it
over
goes up.
time.
Yeah.
Yeah, yeah. Okay, so but I was thinking, okay, with it pushing 570 right now,
In
uh,
the spy.
in the spy, yeah. Like, what if a person put in just bought just one share right now?
You
Would
could.
yeah, but what if it? But here's my question: since it goes up over time, how high can spy go?
How high can SPY go? Well, we took a look at it the other day when we ran that back test on Tasty, and it goes back to 2006 on the SPY
Yeah,
chart. In 2006, SPY was trading at $100.
right. So in 10
So,
years, I mean,
so in 18 years, it basically is 5.5 times larger than what it was 18 years ago.
so
So,
it took 18 years. Yeah, yeah.
okay,
Okay.
yeah, that's a long time, but also look at the returns. I mean, that's a pretty
Right.
big.
Right.
And don't
I
think
was
of it as
just
$100 into 550 or 570. Think of it as if you'd put in $10,000, you'd have $57,000 now.
okay. All right.
If you had $100,000 in 2006, you would be sitting on $570,000 right now in
Well,
SPY. So
yeah. My Norwegian
yeah,
short
cruise
put's
lines.
working for me.
Yeah, let's check that out.
Might
What's
get
that?
out of that
Two short
today.
puts.
Yes, sir.
Yeah, yeah. You just put that on? Yeah.
I put it on yesterday
Mhm.
just to see if I could make a quick buck. Nothing.
Well, that's fine. What's the delta on that? 23 delta.
Yes, sir.
Yeah, that's a good spot. So you're going to win on that about 80% of the time.
Yep.
So all you need is Norwegian Cruise Line to go up, or at the very least, you don't need it to go down.
Right.
Yeah. If it goes up, you're going to win on it quick.
Yeah, it's going up quick
Yeah.
today.
If
That's
it
why
trade,
I was thinking, I was like, yeah, I'll put this on.
yeah,
It
yeah.
looks, I'm bullish on it. So,
And the thing with the short puts is if you get the direction right, you'll get out of them really fast
yeah,
because Delta plays. Yeah.
yeah, yeah.
And if
I
you don't
was,
get the direction right, then say Norwegian Cruise Lines just goes nowhere over the next couple weeks, well, you at that point it's kind of like your iron condors and your strangles. You just need time to pass at that point.
Okay.
If it really doesn't move much. But most of the time, you'll eventually get the move right.
I like these little stocks like that, like the cruise. I'm always feel safe playing those.
Yeah. And today
'Cause
is a down day. The S&P is now down 17. The Nasdaq's down very small, 34. But if you wanted to sell some puts, on a down day, it's a good day to do it. It's a much better day to sell puts today than it was yesterday. I mean, yesterday the Nasdaq finished the day up like 3%. No way in hell I'm putting on some bullish trades yesterday. Just didn't make sense. But if you wanted some smaller price stocks, let's see what we could sell a put in. The airlines, all of them are kind of low price stocks.
you're on stocks low price. Oh,
Yeah, that's my own little
okay.
yeah that I've created 2-3 years ago. I actually need to update it because I created this watch list so many years ago. Some of these low price stocks are really not low priced anymore.
Okay.
Like Royal Caribbean Cruise Line, when I created this ETF watch list here, or this stock watch list, it was probably like trading at $40-50. That's why I put it on the list. But now it's trading at $172. But if we just sort by price and we ignore complete garbage like Walgreens and Teladoc, Robinhood, don't like the app, but I do trade the stock on occasion.
Yeah.
Has an IV rank of 34. Earnings is not until November 5th, election day. Only a $22 stock. Let's see what we could get for if I wanted to sell like a 20 Delta put. I could get 62 cents for that on a buying power reduction of 535. Sell 2-3 contracts of that. Well, let's look at some other stuff. See what else is out there. MRO, Marathon Oil. I used to trade this pretty regularly. I used to trade a lot of the oil stocks kind of on a regular basis, and then I kind of got away from them for a while. IV rank is only 29, so not the best IV rank, not the best liquidity either. Wow. I remember we mentioned yesterday some of the liquidity in these November options. I think some of these options chains were just created. That's why some of them are really low liquidity.
Mm-hmm.
Halliburton, another oil company, 43 IV rank. Looking at its stock chart, it is, wow, it has had a bad year. Coming down from about $44, trading all the way down at 27.5 just a week ago. Pretty good liquidity.
Oh.
Doesn't report earnings till November 7th. EQT. Isn't that a natural gas company? I think it is. IV rank of 39. Well, this would be a way you could kind of play natural gas without actually having to do natural gas futures. Actually, the premiums in here look really nice.
Okay.
For a stock that is only a $34 stock, I could sell this 17 Delta put for 47 cents. I'll sell 2 of them for 94 cents on a buying power reduction of 601. I'll take it up and see if they'll give me 48 cents a piece for them. No. They want 46 cents. No, now they want 45 cents. They just want to walk me down here.
I think I got in at 40.
Yeah, I got in at 46 too.
Yeah, there we go.
Yeah.
All right.
So that's an interesting company to play. I haven't played in a while.
What about Halliburton? Do those two coincide together? Because natural gas and oil.
Yeah, I mean, natural gas and oil do tend to kind of move together sometimes, not all the time.
Okay. So
Yeah.
you wouldn't probably want to put on a Halliburton
You could. I mean, there's nothing wrong with having 2 energy stocks on. It just gets a little weird when you start having, like half a dozen oil stocks on, which is what I used to run into the problem a few years back when I was trading these things all the time. I'd have a Halliburton position, an Exxon position, a Chevron position, then I'd be trading, crude oil futures, and you know, all it takes is one bad day in crude oil, and like half my portfolio was underwater.
Okay, so looking at this 56-day strike on Halliburton,
Okay.
the 19 Delta I'm interested in. So if I do two
Yep.
contracts of that, buying power 554, max
Yep.
profit 92,
I like it.
90% P50, 80% pop.
Hmm.
I think that would be a good, and it's right outside of the expected move
Yeah.
ruler. So
And
do you
and the expected move is factoring in earnings. You're going to be out of this well before earnings, so that expected move is actually less because you're not going to hold it all the way to the 56 day.
right?
Yeah. So yeah, I like it.
Okay.
Matter of fact, I'll put it on with you.
All right.
Which XLB doesn't have great liquidity. Not a lot of people trade it. XLE has fantastic liquidity. It's probably the best sector to trade. Got really tight option markets. You can do anything you want in it.
I might do something in XLE on
Yeah,
the
I haven't put
56
on a
day.
trade in XLE in a while either.
We haven't done XLE yet, have we? I'm pretty sure we've looked at it, but
I've traded it quite a bit in the past. I don't know if I've traded it real recently. I might do a strangle.
all right, I'm down for that. What's something different? 79 and the 95.
Yeah, just because got pretty decent premium. Trying to figure out how I want to lean. The calls are priced really cheap, so about 80 and 96, $116 credit on a buying power reduction of just under $1,000. That's not bad. I mean, we could do Iron Condor. Let's see what we could get for. Try to get 60 cents on this side, okay, and then we'll try to get another 60 cents on this side. Close enough. You could get 115 credit. Oh, basically like the strangle, but now your buying power reduction, your max loss is only 385 on that Iron Condor. And you'd only have to bring in the strikes, $1 on the call side and $2 on the put side from where the strangle was. So it's basically very similar, except a lot less risk.
I'm down for that.
Mm-hmm.
Yep, I think I'll put that on.